Hey guys, Whitney here. Welcome to another episode of the ACCELERATOR Show. I do this show on a weekly basis to help you. Maybe you've tried investing before, but just got totally stuck in analysis paralysis mode and lost all your confidence. Or maybe you've invested in a few deals before, but you've hit a ceiling of growth with your portfolio. Or maybe you just feel so overwhelmed by all the information out there and you're just overloaded and plain stuck and don't know where to start. If that's you, if you've never invested before or have several investments under your belt, you're in the right place. We are going to help you level up your mindset, your knowledge, and your skills in order to scale. So before I get started, this is me and my crazy crew. I started real estate investing back in 2002 with living, flipping, and house hacking, and quickly realized that I was able to build up large buckets of money, but I didn't have financial freedom. I didn't even have financial independence. I was just plain stuck in my day-to-day W-2 job. And while I liked it, I didn't like my life. So fast forward, after doing a few live and flips and house hacks, I was finally able to figure out a way to reinvest all that equity and build cash flow for myself. And, just in a few short years, my husband and I, we joined forces and we built quite a sizable portfolio, largely invested in real estate offerings, residential real estate, and self-storage. We've flipped several $1,000,000 in real estate, but really, honestly, none of this was possible until we got our first 30 cash flowing investments under our belt. And they happen to be BRRRR rental properties. And if you're not familiar with the BRRRR model, we'll touch on that later here. But the key point is we had a base portfolio of cash flowing rental real estate property that unlocked us from our golden handcuffs. And we did all this. We built this portfolio all while working a normal job. I was a wife, mom, taking care of my family. And I'm here to tell you, you can do this too. Okay. You see, when people get into investing, especially in real estate investing, they're doing this for a purpose. Okay. It's not to have 30 investments or 1,000 units under your belt. It's because you want a result. You want something. And I'm going to share that result that most of you, I'm sure, want here in just a second. But what makes what I'm going to share today so different? And see, it's after investing in real estate for over 18 years, I've discovered three things that you have to have that is crucial to you being able to build an investment portfolio and being able to scale it. One, you have to have the right investing roadmap that is targeted to help you to get to financial independence, okay? And it has to be the right one for you, okay? Next, you have to have repeatable systems and a team to help you execute these systems, all right? Otherwise, what you're going to find is that you just have another job. And isn't that what we're all trying to kind of unlock ourselves from anyways, is the day-to-day grind. And then three, you have to have systems in place to be able to scale. And largely this includes utilizing other people's money. Okay, it can even just be bank money in order to accelerate your wealth build. So again, that result, that feeling that most people want when they get into investing, and we're going to start talking broader about more investing topics than just real estate. But what people want isn't to own 1,000 units. It's what those 1,000 units give you. It's not to have this $1 million in net worth or $10 million or $100 million in net worth. It's what it gives you. And that is 100% choice of your time. And when you have 100% choice of your time, that feeling you get is true financial absolute freedom. All right, so let's tackle one of these things that I think is a hot topic in today's market. And that's, how do you mitigate risk when investing in such a hot market? I've been talking to several different investors. It's pretty competitive out there, and a lot of people are finding themselves needing to go near asking or over asking prices. They're finding themselves, the deals aren't plentiful right now. Like the under market deals aren't plentiful right now, especially if we're talking real estate. But how can you buy at retail price and feel comfortable? All right. So let's talk about what risk mitigation is and what it is not. Okay. So, risk mitigation does not mean you are going to eliminate all risk. Okay. Risk mitigation means we understand what the risks are and we've done our best to control for those risks. All right. This statement alone keeps 99 investors out of 100 sidelined and keeps them from investing. Okay, we think the investment space is crowded now. Guys, when people really start unlocking their mindset and understanding what risk mitigation is, it's gonna be a lot more competition out there. Okay, so risk mitigation actually means you have identified, you understand what the risks actually are, and you've laid out a clear plan to deal with each risk should that risk occur. Okay. Now, when we just like last week, we just talked about the whole path to financial freedom. Okay. The first milestone on that path to financial freedom is actually financial security, which when we talk about this mindset that investors have, that's actually a pretty scarce mindset to only be thinking in terms of financial security. And that's where a lot of people come into when they start investing, they're coming in with that mindset, that scarcity mindset. Okay. And that's how I know, that's how I was raised. Okay. Get a job, go to school, get a good job, pay your bills, and everything will be all right. Right. So very scarcity driven mindset. All right. So this is a natural progression of an investor's mindset and an investor's growth. So let's talk about it, okay? I'm not going to go through all the different risks involved in real estate, okay, and show you how to mitigate each one. I'm going to couch them in 4 different buckets for you so you can kind of understand how this fits together as a risk mitigation strategy, okay? And largely, you can pull it out and apply it to other parts of your investing portfolio. One, when we talk about the 4 tenets of conservative investing, and if you guys have been on with me when we talked about the investing roadmap, they are capital preservation, cash flow, appreciation, and tax benefits. Okay, we're looking for investments that give us these 4 things. Okay, either on to some degree or absolute. All right. These guys are our 4 wealth generators. Actually, they are the 4 pillars of generating wealth. If you haven't owned an investment and it lacks one of these pillars of wealth generation, you're putting yourself behind the 8 ball in order to scale, that investment side of your portfolio. All right. We'll get into that at a later topic, but really 4 tenets. We're looking for investments. Real estate fits very nicely into this when we purchase directly or through like a group syndication. Capital preservation, we're backed by a hard asset. Okay, we can still lose capital in real estate. We're going to talk about that. Real estate can have cash flow, it can appreciate, and it can have tax benefits, but you have to own the real estate correctly. Okay, again, these are known as the core wealth generators for any asset. The more of these generators that you hit upon really will help you supercharge your investment growth. So let's take capital preservation, that first bucket, okay? These are some questions when you're evaluating a deal. These are some questions to ask yourself, okay? Is the investment backed by a hard asset? Are you actually purchasing title or title to own that asset? Now, if we're, thinking about real estate, yeah, you would purchase the real estate, you get a title. Well, that might seem logical. I've seen several investors go purchase an asset out of the country, and that country actually does not convey title to them. Okay, the title has to go to a local who lives in the country, and then they're buying some sort of share of that paper that the local is holding. Okay. So again, that's a note that's not exactly backed by a hard asset. We want to make sure whatever we're purchasing is backed by a hard asset. Capital preservation. Guys, capital preservation is so important. This is Warren Buffett's rule number 1. Rule number 1, don't lose money. Rule number 2, see rule number 1. Okay, so the next thing we want to ask ourselves, is the asset, whatever you're purchasing, in demand? Okay, so If we're talking real estate, single family homes, is multifamily homes in demand in that area. Is self-storage in demand in that area, mobile home parks, okay? Assets can be very poorly located and not actually be in demand. Either the market has no interest for them, or there's an oversupply for them and people have a lot of choice and it drives asset prices down. Okay. So is that asset actually in demand? Okay. From both, personal demand and actually the pool of available assets. Another question to ask yourself is how much control do you have on management and at the exit? Okay. So are you going to be very hands-on and buy the single family house or small multifamily and manage it directly? Are you going to give it to a property manager? Or are you going to invest in a syndication deal where the operator is running this on your behalf? Okay. There's certain levels of control there. Okay. It doesn't mean the higher you go up and you're working with an operator that you actually will lose your money. It just means you're further distanced from the control piece of that asset. Okay. Some people like that. They want to have their asset with a professional person who knows what they're doing. Other people are like, nope, I want to see that asset day to day on a daily basis, and I want to make all the decisions. You have to understand what is the best decision for you and for the asset in order to preserve capital. Okay. If you are not a business person, if you do not like numbers, if you aren't willing to do all the research to find the amazing asset in a great market, it doesn't mean that you can't invest in real estate. I do suggest you outsource that so you don't lose money, right? Then how much control do you have on the exit? Okay, what are your exit strategies? Do you have multiple exit strategies? Can you sell? Can you hold? Can you refinance? Can you shift your rental strategy from a long term to a short term to a corporate rental? Can you do lease tenant options? What are your exit strategies on the asset? The more that you have, the better off you will be to preserve your capital. Also, what is your recourse? Okay, if you're investing in an asset and the asset starts to go sideways, well, what recourse do you have to recover your capital? All right, that is a great question to ask. All right, so how do you protect this? How do you guard, with capital preservation? Okay, first, have your own, what I call personal moat built, okay? Reserves, make sure you have 6 monthly reserves and all your deductibles set aside, and do the same thing for your business, all right? That might sound like a large number to you, and it probably is. That might sound like a lot of cash sitting on the sidelines. This will help you be able to weather the storms in the market cycles so you're not forced to sell the asset in a down market, all right? And we're going to touch on that more here in just a second. All right, our next tenet, cash flow. Here's some questions to ask yourself, all right? Does the asset cash flow immediately without having to liquidate any of it or all of it? All right, as you can see, this number one question here throws out any stock market investing for us. Or between question one and question number two, okay? Most stock market investments don't cash flow at all, or they cash flow very little, all right? Number two, does the asset cash flow well, all right? What is the cash on cash return? Okay, we might have a super high cash on cash return, say like a 25% on an asset, but the cash flow is only $50 a month. Okay, that doesn't give me much flexibility to ride out the market cycles if needed, all right? And have you stress tested the underwriting on this asset to operate at varying cash flow levels? All right, right now, I know in the markets that I invest in real estate in, my rents are going through the roof. I mean, I'm a happy camper, I'm a happy investor. However, that's the icing on the cake for me. I actually underwrote those assets to actually operate in a very different market should rents actually have gone the other way, all right? So how do you protect against this? Again, keeping all your reserves, okay? Have business reserves, okay? And also keep your personal reserves. Cash flow is king. Cash flow is queen. If your asset cash flows and will pay all the bills, you will not lose unless you are forced to sell the asset in a down market. All right, so let me repeat that. If your asset cash flows, you can ride out markets until it gets better and then reposition. Now, you may not like the cash flow you're bringing in. Maybe you were wanting to bring in $1,000 a month and it only brings in 300. That's an entirely different story, but you do not lose until you're forced to sell. All right, appreciation. Okay, appreciation is kind of considered the icing on the cake, but we want to invest in assets that stand a reasonable chance of appreciation. Okay, whether it's forced appreciation, something that we are doing to the asset, or whether it's market appreciation. So the question here is, to what degree are you dependent on current market conditions to be successful? All right, this is a very great question for all my fix and flippers out there. To what degree on the current market conditions will you make money on the asset? Have you underwritten if should the market go the other way? Also, for burr investors, this is kind of like a touchy subject too, right? We might start our project and have the asset underwritten to, have a 40% bump in value when we're done with the construction plan. But does the plan still work if asset prices soften a little bit and we only get a 30% bump, right? Again, we need to understand how the market conditions will actually affect asset pricing, okay? And question number 2, have you stress tested that? Okay, make sure that you stress test that in your model, all right? Again, this isn't about risk elimination, but understanding what happens if the market swings the other way. All right, so how do we protect this? Again, market research, when we are investing to get a bump, that appreciation bump, it's location, 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 immutable law of real estate. You have to understand what all the investing cards that you can stack in your favor with market research. All right, you actually also have to understand the quality of the asset that you're buying. Okay, so inspect it, make sure it's a solid quality asset. Okay, you don't want to buy a crumbling asset in a really good market. Okay, you want to buy a below value asset in a good market. And then also protect yourself and get a market valuation report or appraisal. What is the market valuation of that asset in its current condition and subject to any sort of rehab or construction on it. All right, understand, again, that'll help you kind of guard and keep this tenant intact. All right, tax benefits. So does the asset that you're going to buy trigger ordinary income? Okay, this will be kind of like, my note investors. Will it trigger passive income? Okay, this is more for my buy and hold investors. Or will it trigger some sort of capital gains? All right, this is going to be for more of, my fix and flip investors. Okay, understand what you're getting into will help you mitigate the risks, right? There's nothing more surprising to an investor to get starry-eyed, focused on a particular investment strategy, and then all of a sudden whenever they go to exit out of that asset, they're like, whoa, I'm going to get hit with a 20% tax or a 30% tax, right? Understand what your tax benefits are. Okay, so that means you have to, at a very high level, not be a tax guru, but understand the tax code just enough going into that asset, that strategy on how it will impact you. Also understand how different forms of depreciation actually work, all right? If you're gonna hold long-term, if you're gonna fix and flip, how does depreciation, can you even take it? And then how does it affect your plan long-term, okay? And then understand how you can actually prolong your tax bill indefinitely. Right now, we have the 1031 exchange. I honestly don't see that going away under the current administration. Some things might change about it, okay? Rules are constantly changing with the 1031 exchange, but I think there'll always be something in there to help real estate investors continue to buy clean and clean, affordable housing for the market. Okay, again, when we take into account all these different strategies, or excuse me, these different tenants, capital preservation, cash flow, appreciation, tax benefits. And we understand how to ask the right questions that help us get at our worst case scenario that could possibly happen with that asset. That's when we have a risk mitigation strategy in place. Okay. So your challenge to you is, my challenge to you is, list out all your assets, either the ones that are currently in your portfolio or the ones that you want to buy, and do an analysis of how well they abide by the 4 tenets of conservative investing to mitigate risk. All right. So capital preservation, like, are you, in a great solid market? Do you have a nice quality asset? For cash flow, is it underwritten well? Can it go up and down with the markets? Will you continue be able to get future lending because you have actually underwritten your assets very well? For appreciation, again, have you done that market research? Do you know your going in property value and your exit property value? All right. And then your tax benefits are pretty straight up. And then once you understand that, take action. Look at that plan that you put in place, even if it's a post analysis, and then take action. Is it repositioning the asset? Are you going to hold it? Are you going to refinance it? Are you going to sell it? Or do you need to get started and you've got your plan in place and you're going to start investing? So guys, I hope you would agree that this has been time spent so far. If you want help with this, with your investing strategy, with building your portfolio, I've got the solution for you, and that is the Investor Accelerator Program. And this accelerator program is for anybody just starting out investing, doing this on the side, or maybe you're a seasoned investor and you're doing this more full time. I think of the Investor Accelerator as 4 legs on a table. Number one, you have to have the right education. Okay. Most investors stop here. They start doing, they get the right kind of DIY type education. All right. And, but they stop there and then they try to execute. And there's actually 3 more tiers that you have to have. Okay. So we give you all the right education. We're going to, put you in touch with our investing roadmap. We'll help you create that lean investing roadmap, give you all the tools to build the right mindset, vision, and strategy so you can keep leveling up. We're going to surround you with the right systems and team, okay, help you put these systems in place so you can run your business with ease. And guys, I'm actually going to give you all my tools, checklists, done for you scripts and templates to help you shortcut your path to success, and my contacts. All right. And then we're going to surround you in this mastermind with support and scale. Okay. We're going to be meeting on a regular basis. We'll have 24 business and growth calls, expert session calls throughout the year to help you rapidly build your investing knowledge. We're also going to, not leave you hanging. You will be able to get your questions answered on a weekly basis, either live or in our online community. So just think about it. With the right education plan and systems and support, how far could you scale? All right. So let me show you what to do next. If you're interested, make sure to go to ashwealth.com/apply, and let's hop on the phone and make sure this is the right solution for you. You guys, thanks so much for investing in your most valuable resource, which is your time with me here today and in yourself.